Welcome to Trading Lounge and the gold silver report for the 3rd of March, and we'll start with silver today. No particular reason, but we've been looking at this in two ways. We've been looking at it in a bullish count and a bearish count. So we'll look at the bearish count first, and then we'll look at the bullish count, and then we'll look at gold. So wave 3 over here with an A wave, a B wave up here in 3 waves, and then 5 waves down here as wave C here of 4 here. So we've got wave 1 here and wave 2 here, and from wave 2 down to wave 3 we'll be looking for 5 waves. So let's go in and start to have a look at that on the 4-hour chart. So with wave B here, wave 1 here, an A and a B and a C wave here for wave 2, and then going down to wave 3 here, we'll be looking at 5 waves down here for wave 1, and we don't need these anymore, that's come to pass. And now we're looking for an ABC rally here, that if we look for the 50-60% retracement level, just here. Could also shape this up a little bit better now as well. So we'd be looking for an A wave, a B wave, and a C wave to that point, and then we'd be moving down into the 3rd wave. Now the 3rd wave would be longer than the 1st wave. But you know, commodities sometimes like to extend in the 5th wave, so we may get an extension in this wave, and we may even see, if we're going to get an extension in the 5th wave here, which is common for commodities, then waves 1 and 3 can be roughly the same size as well. Getting across the $25 mark here will be a bit of a journey, but there'll also be 5 waves within this structure here as well, so we can count. So that wave 3 will probably, and wave 4 will probably dance across here, and so on at that point. So that's the bearish side. So in terms of shorting, this current move up through here, we would need to see that come back at that point, and then you can short below that, because that will be an A wave, a B wave, and a C wave here. So once the B wave is triggered on the downside, then you can short at that point. You could possibly also put a line through here as well on that, but we've got a bullish count, so we just need to be a little bit extra careful in this case, because if I did that and put a line through there, then this may just be continue straight up here in the bullish count. So coming back here might trigger you in, and then you may get trapped in that point. So that's the bearish count, and the bullish count in the bigger picture here is, well, wave 3 over here with wave 4 finishing here, and then looking up as wave 1 and back for wave 2, then up for wave 1, and then an A wave, a B wave, and a C wave back into the 61.8% mark for wave 2 here. Bit of a long shot, I know that, but the bullish count has always been a bit of a long shot, but we don't mind a long shot either. So anyway, it's just good to be aware of both sides of the coin when you're gambling. So in this case, wave 1 here, an A wave here, a B wave here, and a nice 5 wave structure here for wave C for 2 here. And if this was going to be the case, then we would want to see up for 1 here, back for 2 here. We'd want to see wave 3 and wave 4 would dance across here for a little while, and then wave 1 here, and then we can look back for an ABC, back for wave 2 here, and then pushing off for that would be the bullish count. So one of the things here we can do to split the bullish and the bearish count is that 61.8% mark that we could use. Because if that became the support, then we could go long on that tested support of the 61.8%. So yeah, so that brings us pretty close into that 72 number, because this is a medium level here, and then we've got minor levels here, but the minor level is the 2.8, which makes up group 2 of 72 and 2650 in this case. So just over here, if we can see that we can get a nice first high above the level and then an ABC correction here, then we could look to set up an order on this side of the fence here for that. And if it's triggered, fantastic. If it's not, well, then it will keep you safe, because it will be a bearish move at that point. But taking out that second high, if you can't find the second high, go to the top here. That will be the long trade at that point, because we would be considering, once we got the first high above the level, that's your reference point, then yeah, that would be bullish from that point. So if it is bullish from that point, will gold go up at that point as well? I mean, with gold, I just sort of see it with another low in place, but we'll just keep working the gold to see at what point we can go long, but we need evidence, so we need to gather it. So the weekly chart here, the reason I want to show this for is that this bar down here last week had increased volume. So this had increased volume. So 3 of these bars here had increased volume. So that confirms the downtrend, because it doesn't matter if the trend is going up or down. You need increasing volume for that trend to be confirmed by volume, and that is being confirmed by volume. So we could only go long, say next week. I know it's a bit lagging a bit, but if the market pushed up here and we had an increase in volume over this one, because it's when you're reading volume, price and volume, there's different ways to do it, but if you're reading it as a trader bar for bar, then it's the relationship between these two volume bars, the current volume bar and the previous bar. That's the relationship there, and it's also the relationship between the price and the volume bar here, the price bar. So the price bar, well, the open, where it opened and where it closed is important, and also the range is important as well. And then you also need to match the volume bar up with the range as well. So in this one here, we've got, well, from this one here, this low bar here, we had this much volume, and then this one here had more volume, but the range was longer in this one, and then this one here was even longer still, but the volume matched. It was like more increased volume. So that's the momentum in that regard. So corrections would be, so if this tries to move up here, which it is at the moment, it's trying to move up here. If it moves up here on lower volume than the previous bar here, so we won't know that until Friday's close, and it might be a bit of a mixed bag. We might need to see the daily chart, but in a nutshell, if this has moved up here and it's still on lower volume than this bar here, then it's corrective, because correction's on lower volume. So this move up through here is got decreasing volume here, so that's divergent. So that's where you'll see that in the indicators, the RSI and so on, but you can see it in the volume here. So anyway, just pointing that out, not a big deal. The daily chart here, we won't need this here now. So we've basically had a little bounce off the 38.2% retracement level here. So that top here around the 1705 area, that's the 38.2%. So we've got a retracement level there. It has this finished in 3 waves, as an A wave here, a B wave here, then 1 and 2 and 3 and 4 and 5 here. Well, wave 4 has overlapped this structure here. So as I've mentioned before, there's different ways to count this down. Okay, so but we need to understand a few things. So and look, unfortunately, it's just a bit of a nightmare, but there's no evidence so far that we'll be moving up. Now, if that's going back to silver, if silver turns bullish, well, then we could have a case for gold low being in place, okay? But otherwise, we need to be a little bit careful with this. So I'm not sure what this line is doing here. The important levels here, the 1500, the 1650, and the 1800 here. So they're the levels. So this is the medium level at 15, that's the medium level at 1650, and 18 is the minor level. So we can break it down further into other levels. So obviously 1700's important, 1600's important. But I think what we can do here is that this move down through here is in 5 waves. We were looking at that yesterday. So wave 3, and we're looking for wave 4, and we're looking for wave 5 to come down. So that's all sort of completed. So if this is going to be corrective here, we're going to see an A wave, a B wave, and a C wave come into play here, and then move down from that point. So this is the 38.2% retracement level, and this is the wave 4 of 1 lesser degree here. So we could also just going to put that, oh no, that's right, 1772. So as I've mentioned before with the number 72, when you get just a normal 72 with that, you know, then it plays out to whatever it is. But if you get 772 or 272, like we've got 772 here, it just seems to carry a little bit more weight, and we could see that from over here, and we'll see it from over here as well. Now, because this is the wave 4 of 1 lesser degree here, if we found support on the 772, well, then we could look to being long at that point. But I certainly wouldn't overdo it either at that stage. So even if we get some sort of classic trading levels pattern across that space, which would look a bit like this here, if that was the 772 across here, you would need this process to play out: the arrival, the reaction, the first high above the level, the correction, then gaining support here. So we, in one way or another, just visually, if you can see it, you need to recognize it as resistance to support, and then you move in over here. But if you want to get your timing right, then you need to understand the support, the resistance migration process with all of this. Now, I wouldn't also, let's just say that there's a low in place and the market's going to go up. So that would be the first one over at this point. And more importantly is the 18 here. We can see that there's more volume at this level as well. So we would need to see, I'm just talking about the upside here now. So there will be a larger correction at the 1800 here. So, but once that becomes the support, then you can go along from that point. But will it get up there and do that? That's what we need to find out here. So even if we expect an impulse wave in the first wave A here, then a corrective wave B, and then wave C up through here for this. So we're not sort of anywhere just yet. We've just completed the 5 waves down here that we were talking about yesterday. Yeah, so we just need to see how this plays out as an ABC pattern here. The other important level in here, of course, is when we're working with these, here we go into the sub-levels. So between 1700 and 1800, we use the Fibonacci numbers 1, 2, 3, 5, and 8. So we can put these in here. So the 10, the 20, and the 30 here. So that makes up group 1. And if you get support on top of group 1, the 30, then you start looking at the next level, which is the 50 here. So that would be the target if you're long here at the moment. And then from here we've got the 65, the 72 here, which is part of this little group 2 here, the 80 here, so 65, 72 and 80. So between these whole numbers here, we've got 1, 2, 3, 5 and 8. But with 8 we put in group 2 here. So that breaks the problem down, because if I was going up here and I wanted to go long here, well then I would have to get a classic trading levels pattern sitting on 50. So we had the first high above the level and the second high above the level here. So I could have gone long there, but it never triggered in. So it kept me safe. So it's not a matter of them not working, it's a matter of fact of just keeping you safe. So it's a bit of a two-way street. Yeah, so look, in a nutshell, we've had 5 waves down here that we've been counting down, and now we're looking for the corrective pattern to give us an A and a B and a C here. In a nutshell, failing to find support on the midpoint here, the 50. So that's sort of where we are. I mean, we can have a look at, I've got some other counts here that are a bit bearish. I'll just check on the tick chart here for this. There's a bit more than that, isn't there? So this is 100 ticks. So I can see we got 5 waves in this move here, with 5 waves in the middle of this one. This looks like 1 and 2 here. Do we call that 3, 4 and 5 here? Do we call that the A wave? A bit of an overlap here on that. Maybe 1 and 2, and then 1 and 2 and 3. Looks like a little 4th wave here, so we're still going to go higher there. That's just about running out of legs there for that. Look, I can count that bullish, or I can count it corrective rally, so it doesn't really matter. Let's allow it to mature, and we'll pick it up tomorrow, and we'll see if we can refine a short position or a long position. But we just need to gather more information in this space here. Alrighty, I'll leave it at that. Thanks for tuning in. Much appreciated. Cheers.